preparing for a tax associate at Charles Schwab interview. You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work as a tax associate at Charles Schwab? I am interested in Schwab because tax operations here directly affect clients' confidence in their financial lives. As a tax associate, I would combine technical accuracy with service, making sure forms, cost basis, withholding, and corrections are handled carefully. I like roles where details matter, deadlines are real, and communication is clear. Schwab's scale also appeals to me because I would learn brokerage tax reporting in a controlled, client-focused environment. While answering, focus on Schwab's client-first culture, exposure to brokerage tax reporting, interest in accuracy and compliance, and your ability to explain complex tax information clearly. Question 2. Can you explain the main tax forms a brokerage client may receive? A brokerage client commonly receives a consolidated 1099, which may include 1099-B for sales proceeds and basis, 1099-DIV for dividends, and 1099-INT for interest. Retirement activity may generate Form 1099-R for distributions, and Form 5498 for IRA contributions or fair market value reporting. The key is that Schwab reports information to both the client and IRS, so completeness, timing, and corrections must be tightly controlled. Make sure to cover Form 1099-B, 1099-DIV, 1099-INT, Consolidated 1099 packages, Form 5498, Form 1099-R, and why accurate reporting supports client tax filing. Question 3. What is cost basis, and why is it important in brokerage tax reporting? Cost basis is generally the amount a client paid for a security, adjusted for items like reinvested dividends, returns of capital, wash sales, or corporate actions. It matters because taxable gain or loss equals proceeds minus basis. For covered securities, Schwab must report basis to the IRS on Form 1099-B. If basis is wrong, the client's tax return may be wrong, so basis maintenance is a core control area. In your answer, talk about original purchase cost, adjustments, realized gain or loss, covered versus non-covered securities, and the importance of accurate basis for Form 1099-B. Question 4. How would you explain the wash sale rule to a client or colleague? A wash sale occurs when an investor sells a security at a loss and buys the same or substantially identical security within the 61-day window, meaning 30 days before through 30 days after the sale. The loss is generally disallowed currently and added to the basis of the replacement shares. I would explain the reporting concept clearly, but avoid giving personalized tax advice and suggest the client consult a tax advisor. Be sure to mention selling at a loss, buying substantially identical securities within 30 days before or after, disallowed losses, basis adjustments, and limitations on giving tax advice. Question 5. What is the difference between qualified and ordinary dividends? Ordinary dividends are taxable dividend payments, while qualified dividends are a subset that may receive lower long-term capital gains tax rates if certain requirements are met. Those requirements generally relate to the payer, such as a qualified U.S. corporation, and the investor's holding period. On Form 1099-DIV, total ordinary dividends and qualified dividends are reported separately. The classification matters because it can materially affect a client's tax liability. While answering, focus on tax rate differences, issuer and holding period requirements, reporting on Form 1099-DIV, and why classification accuracy matters for taxable accounts. Question 6. How do short-term and long-term capital gains differ? The basic distinction is holding period. If a client sells a capital asset held for 1 year or less, the gain or loss is short-term. If held for more than 1 year, it is long-term. Short-term gains are generally taxed like ordinary income, while long-term gains often receive preferential rates. In brokerage reporting, trade date, acquisition date, and tax lot selection drive the classification shown on Form 1099-B. Make sure to cover the 1-year holding period threshold, different tax treatment, how brokerage systems determine holding period, and the relevance to Form 1099-B reporting. Question 7. What are covered and non-covered securities? Covered securities are securities for which the broker must report cost basis and holding period information to the IRS, generally because they were acquired after applicable IRS effective dates. Non-covered securities may still appear on the client's statement, but basis may not be reported to the IRS by the broker. The distinction is important because it affects Form 1099-B reporting, client expectations, and how much responsibility remains with the taxpayer. In your answer, talk about IRS cost basis reporting rules, acquisition dates, broker responsibility, client responsibility, and how non-covered status affects Form 1099-B presentation. Question 8. How would you handle a client who says their 1099 is incorrect? First, I would listen and identify the specific item the client believes is wrong, such as proceeds, basis, dividend classification, or withholding. Then I would compare the 1099 to account transactions, tax lot data, corporate action records, and any corrected issuer information. If a correction is needed, I would explain the process and timing clearly. I would document the issue and stay factual, without advising how to file. Be sure to mention listening carefully, verifying facts, reviewing account activity, checking source data, explaining correction timelines, documenting the case, and avoiding tax advice. Question 9. What controls would you expect around year-end tax reporting at a firm like Charles Schwab? At Schwab's scale, tax reporting needs strong preventive and detective controls. I would expect daily and year-end reconciliations between trading, income, positions, and tax reporting systems, exception reports for missing basis or invalid TINs, and quality reviews before forms are released. There should also be audit trails, change approvals, and correction procedures. These controls reduce IRS filing risk and protect the client experience during tax season. While answering, focus on reconciliations, data validation, maker-checker review, exception reporting, regulatory deadlines, corrected forms, audit trails, and cross-functional coordination. Question 10. What is backup withholding, and when might it apply? Backup withholding is required withholding on certain reportable payments when a taxpayer identification number is missing, incorrect, or subject to IRS notice. In a brokerage context, it can apply to interest, dividends, and sale proceeds, depending on the situation. A valid Form W-9 helps establish U.S. taxpayer certification. Operationally, the tax team must identify affected accounts, apply withholding correctly, report it accurately, and help resolve documentation issues. Make sure to cover missing or invalid taxpayer identification numbers, IRS-B notices, withholding on reportable payments, Form W-9, and the operational importance of correct client documentation. Question 11. How do tax lot relief methods affect a client's gain or loss? Tax lot relief determines which shares are treated as sold when a client owns multiple lots of the same security. Under FIFO, the oldest shares are sold first. With specific identification, the client selects particular lots before settlement, according to platform rules. For some mutual funds, average cost may be available. The method can change realized gain, holding period, and tax outcome, so the broker systems must apply elections accurately. In your answer, discuss FIFO, specific identification, average cost were allowed, timing of lot selection, impact on realized gains, and need to follow client elections accurately. Question 12. How can corporate actions affect tax reporting? Corporate actions can change both positions and tax attributes. A stock split changes share quantity and per share basis, while a spin-off may require allocating basis between the original and new security. A return of capital reduces basis and may become capital gain once basis reaches zero. Because issuer tax guidance can arrive after the event, brokerage tax teams need careful review, data updates, and sometimes corrected reporting. Be sure to mention stock splits, mergers, spin-offs, return of capital, tender offers, basis allocation, issuer information, and the need for accurate interpretation and system updates. Question 13. What basic tax issues come up with options transactions? Options create tax reporting issues, because the premium, exercise, assignment, or expiration can affect proceeds, basis, and holding period. For example, if an option expires, the premium may produce a capital gain or loss. If exercised, the premium may adjust the basis or proceeds of the underlying shares. Covered calls and complex strategies can be more nuanced, so I would rely on procedures and escalate unusual cases. While answering, focus on premiums, exercises, assignments, expirations, holding period implications, covered call complexity, Form 1099-B reporting, and when escalation is appropriate. Question 14. What is the difference between Form W-8-BEN and Form W-9? Form W-9 is generally used by U.S. persons to certify their taxpayer identification number and backup withholding status. Form W-8-BEN is used by non-U.S. individuals to certify foreign status and, where applicable, claim treaty benefits. The form on file affects withholding rates and reporting, especially for U.S.-sourced dividends and interest. If documentation is missing or expired, the firm may have to withhold at default rates. Make sure to cover U.S. versus non-U.S. taxpayer certification, withholding implications, treaty claims, documentation validity, and why incorrect forms can create tax reporting risk. Question 15. Tell me how you would investigate a reconciliation break in tax reporting data. I would start by defining the break: account, security, tax year, amount, and field impacted. Then I would compare the tax reporting output to source systems, such as trades, income, positions, and cost basis. I would separate timing differences from true data errors and look for corporate actions, reversals, cancellations, or late issuer updates. Finally, I would document the root cause, proposed fix, and any downstream reporting impact. In your answer, talk about defining the break, comparing source systems, isolating timing versus true differences, checking transaction types, documenting findings, and escalating unresolved issues. Question 16. How would you explain tax information without giving tax advice? I would explain what Schwab reported and how the form is generally structured, but I would not tell the client how to file, what position to take, or how to minimize taxes. For example, I can explain that Box 1A reports ordinary dividends and Box 1B reports qualified dividends. If the client asks whether they qualify for a deduction or should amend a return, I would refer them to a tax advisor. Be sure to mention factual explanation, pointing to forms and IRS definitions, avoiding personalized recommendations, using approved language, and referring clients to qualified tax advisors. Question 17. What Excel or data skills would help you succeed in this tax associate role? Strong Excel skills are valuable because tax reporting involves large volumes of transactions and exceptions. I would use pivot tables to summarize breaks, XLOOKUP or index match to compare datasets, filters to isolate missing values, and conditional formatting to flag outliers. Just as important, I would maintain version control and checks against control totals. I am also comfortable learning proprietary systems and documenting repeatable review steps. While answering, focus on large data review, pivots, lookups, filters, reconciliations, exception tracking, data accuracy, and willingness to learn firm-specific tax systems. Question 18. What are OID and bond premium, and why do they matter for tax reporting? Original issue discount, or OID, arises when a bond is issued below its redemption value, and the discount may be taxable as it accrues over time. Bond premium occurs when a bond is purchased above par and may be amortized, depending on rules and elections. These items affect reported interest income and basis. For a brokerage firm, fixed income tax reporting requires accurate security reference data, accrual calculations, and client election handling. Make sure to discuss fixed income tax complexity, original issue discount accrual, premium amortization, interest income impact, client elections, and accurate 1099 INT or 1099 OID reporting. Question 19. How do you prioritize work during tax season when deadlines are tight? During tax season, I prioritize based on regulatory deadlines, client impact, dollar materiality, and whether an issue blocks downstream filing. I would keep an open items tracker with owners, due dates, and status, then communicate early if something is at risk. Speed matters, but I would not sacrifice review quality. A small data issue can become thousands of incorrect forms, so disciplined prioritization and escalation are essential. In your answer, talk about regulatory deadlines, risk-based prioritization, issue severity, communication, tracking open items, quality control, and staying calm under high transaction volume. Question 20. Tell me about a time you made an error in detailed work. What did you do? In a prior reporting task, I once noticed after submission that one account was mapped to the wrong category. I immediately told my supervisor, quantified the impact, corrected the file, and confirmed no external report had been finalized. Afterward, I added a reconciliation check between the source list and final output. The lesson was to own errors quickly and build a control that prevents the same issue from recurring. Be sure to use a clear behavioral example. Acknowledge responsibility, explain correction steps, describe communication, and show the control or process improvement you applied afterward. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.